The CEO of Robinhood says he believes his platform's stock tokens will change how investing is done. Now, the trading app is giving away tokenized equities to eligible European users. Robinhood says they're basically shares of a company in the form of blockchain-based tokens. The platform even has them for private firms like OpenAI and SpaceX. Now, the Lithuanian central bank, which does regulate Robinhood in Europe, has asked it for clarification about how the product is structured. I spoke with Robinhood CEO Vlad Tenev earlier today. He told me that stock tokens will open up immense opportunities for investors.
I think tokenization is perhaps the biggest innovation in capital markets since the central limit order book. So what it allows is for any asset, public or private, liquid or illiquid, to be put on crypto technology and be tradable round the clock. And at our event, To Catch a Token, in the south of France last week, we unveiled a few features that I think were extremely meaningful, not just for our EU customers, but for the industry. One is stock tokens of over 200 public names, including, all the popular ones like NVIDIA, Amazon, Tesla, and so forth. We also did a giveaway of private stock tokens, as you mentioned, OpenAI and SpaceX. And I believe those were the first stock tokens of those companies issued on a public blockchain.
If this operates like a derivative, right, how do you actually adhere to any kind of value? Because companies like OpenAI, they don't disclose everything publicly about what goes on with their finances.
Yeah, so the way these work is the company obtains exposure to an underlying asset. In the case of private stock tokens, we do make every effort to make sure that the exposure that we offer to customers is backed one for one. And I believe that this can be scalable to many private companies. Many have reached out expressing interest to be part of the tokenization revolution. It could also be extended to many types of assets. You can imagine art, real estate, all kinds of illiquid names can be tokenized in this form and made available to investors on chain.
And Vlad, once again, I'm not disputing that maybe this is a revolutionary platform that a lot of investors want to get involved in, but it is basically betting. And to that point, EU regulation, they've already stepped in. Lithuania, who happens to be your EU regulator, has asked for clarification, right? What are you telling them?
Well, first of all, I think it's very, very different from betting. This is real exposure, and the assets backing this are exposure to the underlying private companies. Now, it is a little tricky because OpenAI in particular, nonprofit, the equity or equity-like instruments that they're distributing to institutional investors are also complex. That said, having exposure to retail, to the transformative companies of our era, particularly companies dealing with frontier technologies like artificial intelligence, I think is extremely important.
And to get back to that issue of regulation, do you see it being a concern for you going forward? And are you engaging with Lithuania at this point about what you're doing with these tokens? Because they've expressed concerns.
Absolutely. And look, every time there's something new and innovative, I think our regulators should have questions. Robinhood needs to be a company that withstands scrutiny to the highest degrees. So we're excited about that. We believe that these products will withstand scrutiny and we will be able to make them available. And many companies have reached out expressing interest in this.
Given a lot of the innovations that you guys have come up with in the last year, you have an enviable stock run at this point in time. I mean, the one-year chart, more than 300%. Much of it, though, is on the back of crypto. And you've already said that you really believe this tokenization is just one part of bringing the blockchain and tokenization and crypto to the marketplace. Is that where you see most of your revenue growth coming from in the next, let's say, year or two?
I think there's two ways to look at crypto. One is as a tradable asset where it kind of sits alongside options and futures and and stocks to some degree. But the other is as a fundamental technology layer where it's next in line in a long procession of fundamental technologies that underpin financial services, starting with filing cabinet, pen and paper, going to mainframe, where a lot of the incumbents still operate in, on-premise, cloud, and crypto is sort of the next step. So I don't think it's as much of a question of what percentage of our business is crypto. I think in the future, crypto and traditional financial services will merge, and crypto will become akin to the underlying technology layer